Buying a home is exciting, but let's keep it real. It's also stressful. And adding to the stress is the understanding that you don't know what you don't know, so it's easy to fill in the blanks with all of the things that can go wrong. I'm Rebecca, the Mortgage Mentor, and I'm a lender that shares everything that I know about mortgages and real estate to help people feel confident when they're making their next real estate move. So let's cover the things that can go wrong to help you avoid homebuyer heartache. One of the biggest ones is going to be changes to your credit. And a lot of times people will talk about the impact as far as if there's any new debt or any new loan. Keep in mind that when you apply for a mortgage, we will be monitoring your credit throughout. They aren't going to be hard hits on your credit, but there is a credit monitoring that is placed. As a lender, when we're giving you that final approval, it's saying, as of today, this is this borrower's financial picture. So if you get excited about buying a house and you decide to go and buy furniture on credit, or maybe something happens with your car and life is happening and you forget about the fact that the mortgage is part of what's going on right now, and you decide to get a car, we are going to have to factor those new loans into your equation. And things like a new debt can have an impact on your loan, because think of it this way. About every $50 in debt equal about $10,000 in your loan. So if you add on a $500 car payment, that's going to be a pretty big impact on the numbers that we're using. Also keep in mind that things like a collection or a judgment that may show up on your credit as a part of the process, that could also impact your approval. If your credit report has expired, because they are valid for 90 to 120 days, so depending on when you were pre-approved and when you're closing on your loan, your credit report can expire. If your lender has to pull a new credit report and your score has dropped, that can not only change potentially your rate, but also the loan type that you qualify for. So my advice is, when you're buying a home, don't feel like you have to freeze your finances, but you do want to keep things moving as they normally do. Now is not the time to make any major changes that could affect your credit history, your debt, or even your credit score. Secondly, changes to income. And these are going to be things like potentially changing jobs. I know that seems like a big one, but right now, with all of the opportunity that people have to try to find the right fit for where they're working, it can absolutely be the right choice for you on a personal level. But if there are things from the way that you are paid, or maybe even the industry that you're in, that could affect your pre-approval. So you certainly want to make sure that if there's anything like that on the horizon, you check in with your lender first before making a choice like that, to make sure that it doesn't necessarily torpedo anything that you're looking to do on the home buying front. Another thing to keep in mind, as far as not just changing jobs, is sometimes that people will change the way that they're paid. So if you move from something that's a salary to maybe a lower salary but a higher earning potential with a bonus or commission. So if you change anything in the way that you are paid, such as maybe you have a salary and now you're opting for a lower salary, but now potentially with a higher income because of the opportunity to earn commission or bonus or something like that, that does affect your loan approval, because we need to have a longer history of that type of income. So changing income types can have a big impact on your pre-approval and your ultimate final loan approval. Lastly, if your work is hourly based, you want to make sure that you don't drop your hours. It can be very tempting to do so to handle all the logistics that are involved with buying a home, but just like everything else with the loan, you want to try to keep things as steady as possible. So now is not the time to drop down on hours, because that may affect the income that can be counted. My advice is, once you're pre-approved, don't make any major changes to your employment or income. If there's an opportunity that comes up, or there's a situation that comes up that cannot be avoided, at least talk with your lender as quickly as possible to understand what the potential impacts could be. Lastly, changes to your assets. So again, when we are pre-approving a buyer, we're not just looking at credit and income, but we're also looking at, where is that down payment coming from? Do they already have the money for down payment and closing costs, and potentially reserves, money left over after closing? Do we know the amounts that they have? Do we know the source as far as where those funds are coming from? Because if those change, that can also impact your ability to qualify. And it's very common sense to think, oh, maybe this money is getting used for this purpose over here, and I can just replenish that with money from another source. But if that source isn't allowable for underwriting guidelines, we now have a problem. My advice is to make sure, just like with credit and income, if there are going to be any major changes with your assets, try to discuss that with your lender before making any of those moves, or as soon as possible if something happens that was unavoidable. Typically everything goes fine, but what you probably hear about the horror stories are centered around these 3 topics. So again, ask your lender of any concerns that you have or any changes that you see on the horizon, because even if they do happen, the sooner that we know, the easier we can deal with them to make sure that things stay on track. Or if we have to find an alternative, we have plenty of time to implement that. And be sure to subscribe to learn everything you need to know about buying a home. And be sure to subscribe so you can learn everything you need to know about buying a home and ask any questions that you have.